Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gertis, all the way down at the end of the table. Wouldn't matter how close he was to the garbage basket, he would not make that.
Nope, not my sport. Nope.
All right, Justin. Always love having updates, and I think one of the things that we say to our listeners is, who you choose on the lending side of a real estate transaction matters. It's imperative to understand all the available programs that are out there, and as the programs change and as new programs become introduced. So you're going to want to, if you're a 1099 employee, I'm going back, I've got like 25 Uber drivers programmed in my phone. I want to go back to all 25 and say, you need to know about this new loan program. But if you are a 1099 employee, Justin just might have the answer for you, and you're going to want to text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON. All right, Justin, the 1099 loan. What is up?
Yeah, I mean, if you're one of those employees or workers that gets a 1099 and you've been denied for a loan because you write everything off, which you should, this is the program that you need to pay attention to. So whatever's on your 1099, we can use 90% of that income, not even using your tax returns, just the 1099, 90% of the income for expenses, and we can get you a home loan with a 660 credit score or higher. The people that are going to really benefit from a product like this would be hairdressers, barbers, truck drivers,
poor real estate agents like us.
Real estate agents.
Poor little old real estate agents.
We're such a humble group.
Uber drivers, just like we were talking about. You have a lot of individuals that do have a lot of expenses when you're 1099. They're contract employees, so they're writing everything off. The home offices, vehicles. They're writing off dinners. They're writing off their workspace. They're writing off their equipment.
And so the challenge is when you do that, then on your tax return, it shows you've made very little income, and it becomes very, very challenging to qualify for a loan.
Most 1099s that we see, when we get their tax returns in, typically they're claiming they made about $2,000 to $3,000 a year.
Hell, I'm trying to show a loss.
Right, and a lot of people do. A lot of people do.
It's a fact.
But if we were able to use their 1099s like we can now, a lot of those people would probably own a home. And these rates are if you have good credit scores, they are not much different than your conventional products.
Well, let's back up a little bit here. What was it before? Like, how did I get? If I was a 1099 employee, how did I previously get qualified versus now?
Yeah, I would have to collect 2 years tax returns.
Okay.
Typically, a 1099 employee is just using a standard Schedule C on their tax return. I would have to go off of the net income on their 1099, on their tax return.
So everything after expenses.
Everything after expenses, and there was only very few things that I could add back on a Schedule C. And typically, people didn't even know what that was. Typically, people are filling out their own Schedule C. They're putting down, the majority of their expenses in there, and we're coming out with very little income. Oh, tattoo artist is another big one that you get with 1099 income.
Any business owner.
Business owners aren't going to be so much 1099 unless they're working for individuals as contract employees. If they're contract, then they're going to be getting 1099s. But this is going to be, to me, this is a big number of individuals out there that haven't been able to qualify for a loan for a very long period of time, or maybe even ever. I have a lot of buddies that are barbers, and they're 1099, and they just don't get they don't claim any money on their.
Well, I'm looking at you. They're not very good at what they do.
My barber is amazing.
All right. Well, at the end of the day, if you are a 1099 employee, you know it. Okay. I mean, you know if you're a 1099 employee. If you are, whether you're an Uber driver, a tattooist, is that the
Tattoo artist.
tattooist? That I just made up a
Tattooist.
word.
Yep.
Tattooist.
You can tell neither one of us have tattoos.
Yeah, exactly. But if you're a 1099 employee, you might have been being told no for I don't know how many years, because it's always been a challenge for 1099 employees to get qualified for a mortgage. This new 1099 loan program that Justin has available to him, he's making it available to you. Text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON.
Is this going to be a program that is just nationwide? It's Fannie Mae, Freddie Mac, or is this a program specific to Fairway? Or
It's a portfolio loan.
Okay.
Yeah, so it is specific to Fairway. We tend to lead the pack in a lot of these types of programs. So there's going to be people that are going to be able to that are going to come up with these programs, or I don't know. My owner may end up brokering these out for people. We've had non-quality mortgage companies have this product available, but the down payments were always extremely high. We were talking 30% with a 700 credit score, whereas this one's 10% down.
It's like it seems like we've always punished 1099 employees across the board. If you're a 1099 employee, okay, so you're taking advantage of that. You got all these write-offs, so we're going to say you can't get a mortgage.
Well, what happened was in 2008, the people were coming back and saying that the banks were giving them loans that they couldn't afford. And so they would go back and check their tax returns. They absolutely couldn't afford it on their tax returns. So this way we can show we're not counting income like we were in 2008 or prior. We're using this 1099 form, and we're proving that they had income on this 1099 form, and we're using a 10% expense. So it's a way to get around not being a stated income, stated asset loan, but still having proof that they make income. Whereas, back then they were able to prove that they weren't making the money, and they shouldn't have been.
well, so let
Qualified
me
for a
ask you a
mortgage.
quick question on that. Is this for non-owner occupied programs too? Or
You know what? I believe it actually is.
it?
I think we can do second homes, non-owner occupied and owner occupied.
All right, and if that's the scenario, and this is a portfolio loan, can I buy under my LLC?
So it's still residential financing. So I don't believe that's going to be a residential, or an investment that you can do. Yeah.
All right.
Yeah. But that's a good question, because we know all these people are business owners because they're 1099. So they're running as a business owner.
So let me throw a scenario at you. I'm running a business.
He's
and
asking for a friend.
Yeah.
Well, no, I'm trying to strategize for some of our business owners and whatnot who may have formatted their income as a W-2 because it makes it easier to get qualified for a loan. But this might incentivize some of them to move from a W-2 over to a 1099. So if I do that, do I still need to wait the 2 years after I transfer over to a 1099, even
You
though I
do.
can prove?
Now, Fannie Mae right now will take 1099, will take 1099 income, but it's got to be on a tax return after 1 year, as long as you're in the same line of work and the net income that you provide on your tax return is higher than the W-2 income of the previous year.
Okay.
So there's still a way there. And in those cases, you're going to want to talk to me as soon as you can before we're filing tax returns, so you understand what you're needing to do. I'm not coaching in any way. I'm just telling you the rules, right? But
This podcast, we can say whatever the fuck we want.
fair enough. But yeah, and in most of those cases, I was hoping it would be 1 year or less, but every one of the programs that we have within this 1099 is 2 years.
That's pretty cool, man. I love that it's rewarding 1099ers, and I think that the whole world should be a 1099. I think everyone should only be able to eat what they kill. And I think that would solve a lot of issues that we talk about week over week here on the Real Estate 401k podcast. So I think that's fantastic.
Go ahead.
Yeah, we actually had a really cool story. So we got this about a week ago, and during the introduction of the product, one of the LOs that was on the call, loan officers that was on the call, had messed up his calculation on his self-employment income and was able to flip it over to this product and close the deal. And it was
Sweet.
We followed up with him. It was super easy for him. So it was,
We're talking about millions and millions of people who last week were unable to qualify for a mortgage, and now under this program now might have a chance of actually buying a home.
100%.
It is that big of a deal. And I want all of our listeners to understand, to your point, it's, the mortgage company that you work for are the ones that are offering this. I dare you, record it, walk into your Wells Fargo bank and ask for the 1099 loan and see how far that gets you, right?
Yeah.
All right, if you'd like some more information, if you are a 1099 employee and you have been dreaming of buying a house but been unable to because of the way that you structure your taxes, Justin and his team might have the right solution for you. It is called the 1099 loan. Go ahead and text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON.